Welcome to my series of video tutorials on how to prepare Form 990-EZ information return for small tax-exempt organizations. I'm David McCree. I'm a CPA, and you can find me on the web at myform990ez.com. In this video, I'm going to talk about net assets. You can think about net assets sort of like retained earnings if you're familiar with that concept. If you're not, don't worry about it. So, net assets, as we talked about in our earlier videos, is simply what happens if an organization sells or liquidates everything it owns, pays off all of its liabilities, whatever it owes, credit card balances, loans, mortgages, whatever, and then whatever's left over, that's the net assets. Assets minus your liabilities equals net assets. Okay, and so what increases your net assets is your income, and what decreases your net assets are your expenses. Okay, so let's have a look at the first page of Form 990-EZ, because there's two places on the form where you're going to have to deal with net assets, and they always need to match. So if we scroll down, so we see the revenues, we see the expenses, and then we get down here to this little section called net assets. Okay, so what you'll find is that on line 18 here, that's where your net profit or loss is going to go. You subtract your total expenses from your total income, and then you'll see that on line 19 is your total net assets at the beginning of the year. Okay, and then you add your profit or loss to that, and then line 21, that's going to be your net assets at the end of the year. Okay, and so this is the part that appears on the first page of the return. Then on the balance sheet, you'll find that line 27 also is net assets. Okay, so that appears on the balance sheet. Your total assets minus your liabilities equals your net assets. And I just happened to open this particular version of a return, and it has some numbers on here from a previous video. They don't particularly mean anything. Okay, and the important thing is that the net assets, what you're calling net assets on line 21, always has to equal what's on line 27 here. Okay, because net assets, there's only one net assets. Okay, you've got beginning and you've got ending net assets, and they are what they are. So let's have a look here at a little spreadsheet that I put together. Hopefully I can illustrate a little bit more about net assets. So what I've got here on this side, this is a statement of activities for 3 years, year 1, year 2, and year 3. The statement of activities is what you might also know as the profit or loss statement, or statement of income and expenses. With the nonprofits, it's called a statement of activities. Then over here, I have what the balance sheet would look like. Okay, and this is cash and net assets. So we're going to just kind of walk through this and see how net assets works. So in the statement of activities, in year 1, I'm assuming this is the very first year that the nonprofit has been in operations. In this example, we're saying that it has $50,000 of income and $49,000 of expenses, and that leaves it with $1,000 in net income. And since this was the first year, it started with zero cash in its bank account. Okay, it opened a bank account with zero cash in it. And so here we see the beginning balance here in year 1. Cash is 0. Net assets beginning balance is 0. Okay, so we start off with a nice clean slate here. So what happened in your bank account? Well, you deposited $50,000 worth of checks, contributions, program service fees, whatever, and you had $49,000 in expenses. So that left you with an increase in your bank account of $1,000. Okay, so your bank account balance at the end of the year was $1,000. Now we know that based on our formula for net assets, we know that total assets, which is $1,000, minus liabilities, which is 0, equals net assets. So our cash and our net assets are the same. Now what you're going to find here is that as long as cash is our only asset, okay, and as long as we don't have any liabilities, your cash and your net assets are always going to be the same. Okay, so let's continue on with our example. So in year 2, we have $70,000 of income and $55,000 worth of expenses. Okay, that means that we have $15,000 left over at the end of the year, excess. And that excess, where are we going to find that? Well, we're going to find that sitting in our bank account. Right? So our bank account increased by $15,000, and here you can see that. We had a beginning balance of $1,000. We had an increase of $15,000. So that means our ending bank balance was $16,000, and you can see then that our cash, our assets, minus liabilities, which is 0, is $16,000. We go to year 3, we have $50,000 of income, but this year we had $60,000 of expenses. Okay, we burned up some of that money in our bank account that we earned the year before. So we have a $10,000 loss. So our beginning net assets was $16,000, right, from the year before. And then we had a loss, we had a decrease in cash of $10,000. So we have an ending cash balance of $6,000. And of course, our net assets decreases by the same $10,000. And we have an ending net assets of $6,000. So as you can see, our net income adds to net assets, and our loss subtracts from net assets. Now, if we had some liabilities in here, how would that affect our net assets? Well, it wouldn't affect it at all if, for instance, we took out a loan, say for $500, to purchase a computer. In that case, our cash would go down by $500 and our liabilities would go up by $500, and it would wash on the balance sheet. Transactions that only affect the balance sheet will not affect net assets. Only transactions that go through the statement of activities, in other words, they're either an income or an expense item, only those will affect net assets. So let's look at some items that can cause a difference in the net assets on line 21 and the net assets on line 27, because if those are different, you need to find out why they're different. So let's look at a couple of common items that could cause that problem. The first thing, I've made a little list down here. The first item is a transfer between bank accounts that are recorded as income instead of as a transfer. Let's say that you have 2 bank accounts or 3 bank accounts, and you from time to time transfer money from one bank account to another. Some organizations will record a transfer as an income item, okay, or as an expense item, and they're not. Okay, it's just you're just moving money from your left pocket to your right pocket. So transfers are neither income nor expenses. If you have deposits or checks that are on the bank statement and they're not shown as income or expenses on the statement of activities, then you're going to have a difference in your net assets on line 21 and your net assets on line 27. Okay, you have to capture on your statement of activities, you have to capture all of the income and expense items that are on your bank statement. The other thing, which actually is unfortunately quite common, and that is when the bookkeeper makes direct accounting entries to net assets in the accounting system. That will cause a difference between line 21 and line 27. Now, there are times when you need to make an adjustment directly to net assets, and when you do, you also have to make that adjustment on the tax return. Okay, the same adjustment has to be shown on the tax return. And let's have a quick look at where that would be made. Okay, so you can see here on line 20, other changes in net assets or fund balances, which you need to explain in Schedule O. So if you find that line 21 does not equal line 27, then you're going to need to put, and if it's because the bookkeeper made an adjustment to net assets, then you're going to have to reflect that same adjustment here on line 20, okay, on page 1 of the return. And you want to give a good explanation on Schedule O as to why that happened. Usually that's because it's a correction of some type of an error. Okay. So the key thing to keep in mind is what affects net assets. Income and expenses will affect net assets. Moving things around, making entries on the balance sheet between liabilities and assets, not going to affect net assets. I hope that gives you a little better understanding of the part of the return that frequently, this is the area that even sometimes CPAs get wrong, okay, because it can be tricky. I hope this has been helpful to you. Good luck. Thanks for watching my video tutorial. If you need more help, you can find me on the web at myform990ez.com.